Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, we are going to do a prediction for interest rates for next year and also talk about, yes, Juana has a terrified look. Juana, it is not our prediction.
Okay.
It is the NAR, the chief economist, Lawrence Yun.
Okay.
And then we're going to also talk about the home prices and the fact that 80% of markets have had home price appreciation and what that means. Okay. Here's the quote from the article.
Okay.
NAR chief economist Lawrence Yun forecasts that existing home sales will rise by 15% next year. That's not prices. It's total number of sales.
Okay.
Home sales.
So he's talking about the number of homes selling. He's not talking about the value of the homes.
Yeah. Well, I saw this. I was like, what? That's just no way. Okay. And mortgage rates will be between 6 and 7% by spring, which is just less than 6 months away.
Okay.
Okay. Now, you're probably wondering why. Let's talk about this. Now, this article just came out, brand new article. Okay, here's a quote from it. The 10-year Treasury yield is at 4.4%. Now, remember, this thing was almost at 5 2 weeks ago.
Right.
It's at 4.4. Mortgage rates went from 8. They peaked over 8 and they dropped down to 7.4 in like a course of 4 days.
Right.
Okay, which historically means mortgage rates could be at 6.4%. They're much higher, said Young. The bond market is forcing the Fed to pivot. So the bond market really drives interest rates and the premium over the 10-year and that added risk premium that they put to do a 30-year mortgage, right?
Right.
So because there's a lot of borrowing out there or there's a lot of other opportunities for risk-free bonds, people are taking those instead of buying mortgage bonds. Like the question you have to ask yourself, one, is if I said, like you can buy, right now we can buy a Treasury money market risk-free for 5.2%, right?
Nice.
Okay. Or if I said, or instead of getting 5.2% on your money risk-free, what if I told you I could give you a 7.5% that's tied to a whole bunch of homes that are all paying 7.5% mortgage? And you would just get payments every month the same way. But there's some risk because you might lose some of those. Like some people might foreclose. The effective rate of that might only be 7.4%.
Right.
Effectively. You might have some losses in there.
So, I would probably consider it in a balanced portfolio.
Right. So that's what the market does. That's why these things sell in the secondary market. Here's another quote from the article. Yun said the 30-year mortgage and Fed funds rates have likely crested. I believe we're already reached the peak in terms of interest rates, Yun said. The question is, when are rates going to come down? So Juana, the Fed said no more raises. Inflation is now down to 3%. It's come down every month almost for 4 or 5 months. They're talking about maybe next year doing 4 or 5 rate decreases for the Fed rate decreases, right? Federal funds rate.
Yeah, I think that's a possibility. We've talked about that before. Obviously there are people far smarter than I am who think that that's going to happen in the first quarter. I think more likely in the second quarter. If it does happen in the first quarter, it'll probably be all the way out in March. I don't foresee anything in January. February is kind of a toss-up. I think it's possible in March, but I think it's almost a done deal for the second quarter.
Do you remember last year, the 100% chance of recession estimate? It was a 100% chance.
Right.
And we haven't had a recession last year. Now they're saying we could have one in the spring, maybe first, second quarter. Probably mild, but maybe not have one at all.
Right. I'm kind of that opinion too. I think if we do have one, I think it'll be a snoozer. I don't think it'll be very exciting, which that's a good thing. Yeah. I think it's possible that when they read all the tea leaves, they end up saying, well, that recession thing, well, it wasn't really a recession. They've done that before, right?
Yeah.
So I think that's probably the more likely scenario.
Okay. Now, even though now for a year, we've had interest rates basically, they did dip below 7 for a while, but over 7%, let's just say for a year. We know that about 2 or 3% of all mortgage loans are over 7. They were basically all the ones originated in the last year. Okay. Home prices are still rising in more than 80% of U.S. markets. Now, month over month, this wasn't the case, October to November, or September to October, because that's normal to have that price decline in the fall. But when you look at year over year, and this was an analysis where they just did the third quarter. They took third quarter prices of this year, third quarter prices of last year. 80%, why would 80% of U.S. markets have higher home prices when a year ago in the third quarter, interest rates were about 6%, but now they're about 7%. So they're literally a whole percent higher. Why would home prices still be going up?
A couple of reasons. One, supply and demand, right?
Okay.
We have more demand than we have supply, so that keeps markets strong. And then the other reason is because we have strong employment numbers. So people are willing to spend their money on their housing costs. That's kind of a given. As far as the sticker shock of the interest rates, I think you've got kind of two camps: people who simply have to buy a house because they need somewhere to live,
Okay.
and people who simply say, you know what, I'm going to just roll the dice because I know that interest rates are not going to be at this rate forever. I just have to put up with it for a couple years, and then interest rates are going to come down, and I'll be able to refinance. I will have been in my house for that time. My house will have hopefully appreciated. I will have had the opportunity to enjoy my house, maybe get some tax benefits. So it's more complicated for people. Everybody's got a reason, but at the end of the day, homes are selling. There are not enough homes for the number of buyers that are willing and able to buy them.
Here's a quote. Home prices continue to rise in most areas of the country as more home buyers face affordability challenges. The median price nationwide for existing single-family home in the third quarter was 4,069, which is 2.2% higher than a year prior, according to NAR. More than 80% of metro areas registered home price gains third quarter, with some markets posting double-digit increases. So, I've got a chart. I'll just throw this chart up here. This chart shows the highest of where there were appreciation. What's weird is Miami's not on this chart. I mean, you got Farmington, New Mexico, Fort Wayne, Kankakee, Illinois. That looks like a suburb of Chicago, Green Bay, Oshkosh, Newark. That's a surprise. Dayton. So kind of some random smaller places. Of course, Miami was a big one. It was up, I think, 10% or 10.5% year over year.
Right. So the thing to keep in mind is that when you're looking at these appreciation numbers, these are on the whole price of the house, not on the amount that you put down for your down payment. So when your home appreciates at 2% and it's a $100,000 home, that's that's $2,000 on $100,000, but you didn't put down $100,000. Most you put down maybe $10,000 or $20,000. So that rate of return is actually greater, right? Because if you put down $10,000, then that 2%. The 2% on $100,000 is good money off of $10,000 that you put in.
We'll do a whole video
that's a whole other video, as Todd puts it. The other thing to keep in mind is that inflation, right? So prices have been rising in other sectors. So one way to control probably your largest expense is your housing expense. So one way to control that is to have a fixed rate mortgage for the foreseeable future, and then you don't have to worry about inflation. And I think that's something that some people have kept in mind and probably has encouraged them to purchase a home in the last couple years when we've had pretty high inflation numbers.
If rates go between 5 and 6 next spring, Juana, what do you see with regards to buyers that maybe are on the sidelines right now?
I think it's going to be a feeding frenzy again. Okay. And while right now we don't have enough inventory to satisfy the number of buyers that are willing and able to buy, we're going to have even more buyers that are willing and able to buy when interest rates come down, and there won't be enough inventory. So what that's going to do is supply and demand tells us that prices will likely go up because you're going to have multiple offers again. Now, I'm not suggesting that we're going to have 30 offers on every house this spring, but I am suggesting that if interest rates come down, then you will have multiple offers, and multiple offers, we know, generally result in a higher sale price than the list price.
Okay, here's a quote. Homeowners have accumulated sizable wealth, with the typical homeowner gaining more than $100,000 in overall net worth since 2019 and before the height of the pandemic, says NAR Chief Lawrence Young. However, the persistent lack of homes on the market will make the dream of homeownership increasingly difficult for younger adults unless housing supply is significantly boosted. He's not talking about listings in the MLS housing supply. He's talking about the total number of houses available to be purchased. Mm-hmm. And we're only building about 700,000 houses a year, but we're creating 2 million households a year. So we're still we're probably 6 to 8 million homes behind in building, mm-hmm. and we're getting into a deeper hole, which is the reason why when people say, why are home prices still going up? This makes no sense. Sure, it makes sense. the people trying to buy homes, that number of people is growing, and then the number of homes available is not growing as fast. So this is called supply and demand. You can watch all the Crash Bro videos and all their stupid, ridiculous ancillary, well, if on the third week of the fourth day a peach hits on the sidewalk and falls in half, that signifies a housing crash. That's great. But then none of that's real. It's only supply and demand. And here we have supply of homes and number of people that either two things can afford to buy and are willing to buy, right? And right now you say, well, how no one can afford blah blah. Yeah, people can afford. We talk to people every day. Like Juana has mentioned, she's works at a luxury brokerage, and these people are paying cash for multi-million-dollar houses, right?
Right. So once you get above $3 million, it's more likely than not that they're paying cash.
Yeah. So the bottom line is interest rates. I mean, no one knows what's going to happen. Get a lot of people who come in the comments and go, well, in 2 years, interest rates will be over 10. Okay. If you think interest rates will be over 10, you should buy every house you get your hands on and lock them in at this low 7.5% interest rate, right? Because now you can sell the house in 3 or 4 years and they can just assume your loan because it'll be super low, right? If you knew for sure rates would go up to 10, like if someone had a crystal ball and said in 3 years or 2 years rates would be 10%, there wouldn't be one house left on the market. They'd disappear tomorrow. Right? Either cash or people get loans on them. I think we've probably at a peak just because of all the data we have. The Fed, everything else, the 10-year Treasury. I mean, I don't know about 5 to 6, but I would be shocked if we have 7.5%, 8% next spring.
That would surprise me too. But I've been surprised before, so we'll see. So do you have any more charts?
No, that was it.
Okay. So what do you think? What will interest rates be in the spring?
Put it in the comments.
Take out your crystal ball, put on your Karnak the Magnificent hat, and figure out what interest rates will be in the spring. Put that in the comments. We appreciate your real estate related comments. Please remember to like the video, subscribe, hit the notification bell. I mean it. Hit that notification bell.
Yep. Watch all our videos.
Yes.
All 2,200 and something. No, 1,200 something. We have 1,200 videos. It's pretty, yeah.
Okay, so you'll have to watch all the videos and number them so that Todd knows the exact number of videos we have.
I stopped counting after 1,200.
All right. Well, I hope you had some fun. Hope we made you smile. We'll see you on the next video. Bye.
Bye.